Yeah, Wednesday. What's up, everybody? Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Let's go ahead and take our real quick look at our big four markets for today, looking for opportunities in both breakout and reversal trades, as well as a stock of the day. So starting with the S&P. S&P today, yesterday we were a little bit, I call it a nothing burger. As yesterday we stayed in between our range. There wasn't a whole lot of great tradable opportunities yesterday morning when we looked at this. Matter of fact, we even ended our live trade room a few minutes early just because it was such a nothing burger kind of a day. But today, I think that we're a little bit closer to a potential breakout above this 44.22 half all-time high. Remember, basing before the all-time high does give you an opportunity for a long breakout to the upside. If we do indeed pull back a little bit deeper, you've got a couple of areas in here that may be worth considering. As I look at this little bit of demand right here on a 15-minute time period, this sets up for what we call a bear trap. Now, remember, it's a bear trap because there's going to be a lot of bearish traders that say, oh, hey, we got below the Globex low, time to get short. Well, as they get short, there's some buy order sitting down there for an opportunity. So this is a wick over wick on a 15-minute chart. So anytime you have a wick over wick on a 15-minute chart, it's a slightly lower probability opportunity, just because we're on the 15-minute chart. So remember all of the 6-candle rules, and your stop would still have to go below the pivot down here. So that might be a little bit too tight based upon the reward to risk, and so make sure that there's not any basing there in front of the level. The Nasdaq, we are also sitting kind of in between the area. We looked at some potential Nasdaq areas yesterday, and once again, in between levels, not a whole lot of good trades to lean on. If I take this one down to the 15-minute time period, I don't have as clean of a reversal trade down here, which makes the S&P one a little bit less probable for a reversal. But I think overall, I still want to trade the breakout above that region. Looking at crude oil. Crude oil, we are looking for short opportunities as they rear their beautiful heads. I mean, ugly heads. Yesterday, we saw a really big sell-off in crude oil early in the morning. I was looking for a potential reversal back up into the 71.29, 71.61 region. I'm going to do the same thing today. I'm going to remove this one, and I'm going to put this area right here. If we come back up and retest this region right there, I think you've got a decent entry possibility. Problem is, I don't know that we're going to do that. And so you might actually be better off looking at a potential breakdown below this line here. If, once again, we need to get our basing, right? We have this little wick area over here, a little touch there, a little bit of basing here. That would give you a decent potential for a breakdown. But without the basing, there's no breakdown. And then last is gold. And gold, we have a little area of supply up in here to pay attention to. If we are basing too close to that level, on that supply level up here, remember that our stop loss has to be above the wick of the leg-in candle. So you're looking at a risk distance, a minimum risk from here to here. And so if you wanted to have a 2-to-1 reward to risk, that would be a 1-to-1. And right here would be a 2-to-1. So you've got a little bit of basing here that's within the 2-to-1 reward to risk area of the level. Still a valid setup, but a little bit concerned with that basing to make that level up here a little bit less probable. So just be aware of that. Now, it's still a good structure from a structural standpoint, but it is not it's not the best level out there. That's for darn sure. So just be aware of that coming into it. Matter of fact, on a 15-minute chart, this is a good little setup here for a long on a smaller time frame chart, 15-minute zone. Remember, we don't go below 15s very often. Taking a look at one stock for today. Stock I want to take a look at and pay attention to is Microsoft. I think Microsoft also, a little bit like the S&P, could be setting up for an upside breakout above these highs. Looking at this on the daily chart, you can see that as well. We just had an earnings report in Microsoft. The earnings report were higher than actual, so from a fundamental standpoint, it looks good. If I throw on my Traders Army implied volatility range indicator on here, we can see that we're in a fairly low implied volatility area for Microsoft. And so I'd be okay if you wanted to do something like a bull call spread or just straight up buy the call. Could also be a setup for maybe sell some puts in order to use the capital from selling puts to purchase the upside call breakout move. So that's all I've got for today. I hope you guys have a phenomenal Wednesday. Until tomorrow, see ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.